Okay, well, let me welcome you to our daily market review analysis. Appreciate you joining me. Hopefully we'll have quite an interesting time and some specific ideas that might work out well for us in days to come. So we will make a start with looking at our usual equity index. And for the last few days we've been saying that we are congesting sideways, and the market often tend to either correct by moving up or down, but occasionally it would just simply move sideways. And at the moment, a little difficult to tell, but it looks like we may be moving out of the sideways range to the upside. Today we made an attempt, but we haven't quite broken out of the horizontal range we had for almost best part of the last week. This is the daily chart of Dow Jones Industrial, and once we break out, then we are, remember, only completing this wave 3. So we're in a process of completing this wave 3, of which we think we have a final move to the upside, which could be about 150 200 points, and it could then find an interim 14,200 was the 2007 high, or just shy of that. So I think we could quite easily push to that area before even experiencing a minor pullback. Now exactly what kind of a minor pullback we'll get, we'll have to wait and see. At the moment there is no way of knowing that, but I have put this brown trend line on. It's only tentative trend line. I've got nothing else to really guide me except this low. So when we get a pullback, we will know, for example, whether we are going to be getting something like rising wedge, and I highly anticipate we will probably get a rising wedge. So once we get to 14,200, we might pull back a little bit, few hundred points, and then possibly make another attempt higher to complete this 5-wave move to the upside, and that would then complete this current cycle, from which we would then expect a reasonable retracement. But even then, just how far the retracement will be, I think overall we will be limited in our retracement. I think somehow, if you look at this chart on a slightly longer time frame, say over a daily chart, and you see this rising trendline support, I think that one could quite well come into play. And when you look at it, I mean, if it did go to 14,200 or so and then fall to something in the region of 13,000 or so, that's like, that's reasonable. That's fairly good pullback, almost equate to something like 10%, and that would probably panic a lot of people. But I think the move will not be completely over. One of the reasons why I think it won't be over is because at the moment on a daily chart you can see we've been coming down, and the RSI is high with the current range here. So when we get this pullback, that will only be, so for example, if we get a higher price and we find the RSI pulls with it but not to the full extent, then potentially we will get a divergence, but that divergence will be only in respect of the current wave. Okay, so ideally what we'll need to see for a genuine divergence and about 10% correction is the following. So from here we want market to pull back a little bit, go up to 14,001, 14,002, pull back a little bit, maybe back to 14,000, and then make another attempt and actually take out the 2007 high. So once it's done that, then this is a rising wedge. And when we are talking about this rising wedge, the question arises is whether this rising wedge is after this move, or is the rising wedge the first move. Well, looking at it from, trying to work this out, so looking at it from the low we had back in October 2011, you can see here that we had A, B and C, so that could be first zigzag up to, say we call that W, then we had a wave X, and then here we had a wave Y. And if you look at the RSI, with that particular move, the RSI was almost equal to that one. So I think that element belongs to this previous cycle. So it looks like we have started a new cycle here, and hence actually the RSI going much higher. See, when we had the pullback, RSI came back within the proximity of the previous low. So my feeling is that this current cycle up from the low we had in November 2012 is actually the first part of the wave. So that means it's a rising wedge starting from the low, so it's a leading diagonal. So from that perspective, what I think is likely to happen is maybe get half the depth or half the length of the wedge. So we are looking at potentially over here where we had resistance broken above, when we come back potentially support. So I think we will probably pull into something around 13,400 area. And also on the left hand side, further left, we see we have more important resistance point from where market corrected, and also another resistance point here. It is at 13,600. So I'd say that we will pull back into 13,005 to maybe 13,300, somewhere in that area, and then we will be looking for another leg higher. And I suspect that once we get that zigzag done, we will have this W, X, Y, X and Z. And in fact, let me put this, if I can get to it. So this Z here will be a bit further up, and I think by then we will have truly gone into well above the 2007, and it would appear possibly like a false break, and we will probably then make some sensible correction. That correction could be quite noticeable, and possibly, you know, some kind of a panic selling. But I think when we get to 14,001, 14,200 and we come back, I think we will only have a minor correction. We're looking for another wake up. So each of these are double zigzags. See, A, B, C, W, X. Then we've got here a Y. So that finished up, and even in a Y, we had potentially like a 1, 2, 3, 4, and 5, the 5 wave, or more likely A, B, and C. So in the same way over here, we'll get a 5 wave up. So we'll probably call that one wave A of the current cycle. We'll be looking for retracement for wave B, and then we'll be looking for leg C, which would then complete this W, X, Y, X, Z possibly. And if I take this wave up here and I put from here, I get 1-to-1 ratio coming in around 14, almost like 15,000. Okay, 1-to-1 ratio. So when I say 1-to-1, this is what I mean. And if we just have that on its own, forgetting all the wave counts, it's not necessary for it to be exactly 1-to-1, but if we did that, for example, see, we come into proximity of this area here, 14,800 to 14,900 approximately. And likewise, if we did again 1-to-1 ratio, we will come into that area. So I think there is a good chance that we would actually get a possible reasonable top. Well, let me not use those words. When we come here, I think we will get a fairly significant top, not necessarily the all-time high, but significant top from where we would expect kind of correction which we've not had along the way here, because that would complete the larger cycle. If I can show you, see, if you look at this here, then you see on a bigger scale, we've had W, X, Y, X, Z. That's basically what is going to happen. So maybe the entire cycle up from 2009 would probably complete in the region of about 15,000, and after that I would expect that selling to be fairly significant, and that selling would probably coincide with several other markets either finding their relative lows and highs. But for the time being, I'm not expecting any serious selling in the equity market. I think it will continue to staircase up, probably not have any selling even along this line until we've probably gone up to and taken out 2007 high completely, probably into region of 14,003 or 14,400, by when we would then expect a selling which will be probably equivalent to this kind of a selling here, I think. Okay, so for the next few days I think the equity market will continue higher. You can see this little movement sideways, this little movement to the sideways. Today I think market tried to break to the upside, so it's possible that tomorrow it could probably go through it, and in which case the wave 4 of this wave 3 was a sideways correction, and we'll be looking for a market to move higher. So let's look at the oil index. Now in oil index, what I have done, let me just show you the weekly chart, and we'll work from here. So on the oil index we had a significant sell-off, and once we had that sell-off we've now gone up, and I think this first A, B and C completed one cycle, then we had a wave X, and we're in the process of now completing a second cycle. So in the second cycle we've had a wave A, and you see all of this here is I think actually a wave B. So if I was to put this on, well, maybe I need to modify that and say if I was to put, let me change the color of that one. What color shall we have? A thick brown, and this one here I am going to change as well, because I think that line will probably not have any significant play. But what I am going to do is I'm going to possibly add A, B, C, D, E. Okay, now what I was expecting, there are two possible scenarios here. So briefly let me just point out, but both of them are suggesting there is a move to the upside on oil. So we've had this first zigzag of wave X, then we've got wave A, this triangle is a sort of a wave B. So I think when we finish, we will finish up this one here, which would be wave B. And exactly where does this finish? So there is a possibility that we've had A, B and C down. That could be one, or we've had A, B and C possibly. So maybe that's where the wave B should be, I think. A, B and C. Okay, now since then we've started a new cycle. If you look at the RSI, you can see the RSI with that low is the lowest RSI. So I think that's where the wave B should be, personally. But it is of less important right now. It will become a bit more important over a period, but less so important right this moment in time, in a sense that that could be A, B and C to complete wave B. So now we are looking for wave C. Now in the wave C, what we will be looking for is this first leg up is actually a rising wedge, as you see. So that's a leading diagonal of 5 waves. Then we had A, B, C retracement back down, and we are now making a next leg up. That could be either wave 1, wave 2, wave 3 going forward, or it could be A, B and C going forward. Okay, but whichever the case, on this one I have changed the labels a little bit, which I pointed out to you a couple of days ago or yesterday that we might have to change that. So from here I am calling this one minor 1 in parenthesis, minor 2 in parentheses, this one is a minor 3 in parentheses, minor 4 in parentheses, and minor 5 in parentheses. So when we finish this wave 5, then that would probably coincide with the equity market making an intermediate top in the region of 14,001, 14,200, maybe 14,003. We will probably get this leg up here then, and then we will pull back with a view of continuing higher. Okay, so currently you see in a nicely defined narrow trend channel that was marking out this wave 3 in parentheses. We came back, retraced 4, so we are now again on our way up towards 102, from 100 to 102 area, which will obviously take out this high, but that might be series of higher high and higher lows, in a sense that we'll have wave 1 complete, then we'll retrace for wave 2, then we'll continue higher in that particular manner. So the oil is supportive of our expectation that for at least the next few days or a week or so, the equity market will be going higher also. If we do 1-to-1 ratio in green, then we are looking for oil to come to somewhere in the region of 107. Okay, otherwise anywhere from 100 to 102, but I think it could quite possibly start running up to 107. So that's the oil. Also, just to go over the okay, no, we'll come back to that again later, I think. Okay, let's look at the dollar index in that case. Now the dollar index will go on to the daily chart. On this daily chart, you'll remember that there are two possible scenarios I've been pointing out. So the first scenario is my preferred one, which is basically a triangle, and if the triangle fails, then we'll be looking for a flat. Now you know what a flat is because I pointed out here. So for example, this A, B and C represent this leg here. A, B and C down represent this one down. So basically that becomes A, B, and we are in a process of wave C. That is if we have a flat. And the Elliott wave principle says that if you get A, B, C zigzag in wave A, B, C zigzag in wave B, then in a wave C we'll get a 5 wave up. So if this becomes a flat, we'll get a 5 wave up, and we're looking for high in that case from 81 area, possibly maybe even higher up to 8150 area. Okay, but if it is a triangle, then we won't have that. Then simply we'll have A, B, C, D and E, in which case either is finished or is about to finish. Okay, so this would be wave E, assuming the triangle holds. And I am of the opinion, a little too early, but I'm of the opinion that I think the triangle is complete. And the reason why is because from this wave D here, okay, if we were having 5 waves to the upside, then this is how it would work out. You can see wave 1 here, wave 2, then you got 1, 2, 3, 4 and 5. So that completed a wave 3. Okay, so that completed wave 3, a small pullback for wave 4, and then final one, wave 5. Okay, so that's a 5 wave move up. So even if it was to go with the flat correction where we needed sorry, it's in the same chart, where we needed a 5 wave up, then this one is apparently done. Okay, if it's not the 5 waves, then it may be wave A, wave B and effectively wave C. So wave C here, and the way it would look on wave C is that we've had, for example, from there to there as wave A, then we've got wave B, and then here we have a wave C, which is effectively 5 waves up. So go 1, 2, 3, 4 and 5. So either way, it could well be over. Now the other reason is, if this is over, then we should start getting very impulsive movement to the downside. And if I drop down to say 1 hour, maybe 30 minutes or even 15 minutes. Okay, so you can see here now that since the top, which is over here, you can see that it counts very clearly 1, A, B, C back up, so 2, this is 3, this one is 4, and we are probably in the process of forming 5. So if that's the case, then we would need to know or need a confirmation, but at the moment it looks like this is 1, this one is 2, this one is 3, wave 4, and what we might get is possibly wave 5 to finish here. That would complete one complete sequence. Okay, so if it completes sequence, then of course we know we are going to get an ABC retracement. So then we will get something like this: A, B and C retracement, and it would conform to some kind of a fib ratio. So assuming we get a low here, then we are looking for 38%, but more likely 50%. So in which case, if you get a low in the region of about 7, say around too high. Okay, so say if we get a low in the region of about 79.80 somewhere, 79.80, then we'll get ABC retracement back up. We could come back to something like 80 area here, which horizontally you see is a small time frame, but horizontally it would come back to this sort of area here. And see, we have this possible rising trend line. So it might appear as though it is going back to retest that broken trend line. Okay, so if I just put that trend line there, so market comes down, goes back up, and if it did ABC up there and start moving down, then that's a confirmation. That would be all we need to confirm that the top is in. Otherwise we might begin to move back up. But at the moment, if you look at it, to me it looks like we are moving down fairly strongly in what might appear to be an impulsive move. So once we've got this final leg down to here, ABC retracement, so that becomes wave 1, wave 2, and then we'll be in a very strong wave 3, and most likely in that case we would then as it progresses take out the rising blue trend line we've had for this trend line here for a while. Okay, so either the dollar index has topped, or dollar index might actually after this one do another run up. Little difficult to say, but we'll need confirmation. So that's the confirmation we are looking for, and we will probably get that by tomorrow, I suspect. So this is what I was trying to point out in the fact that we've got 1, 2, 3, 4 and currently working on the 5. So we go back to retest the trend line. So we've covered the dollar index in that particular sense. If we have seen the top, then basically we will be now looking, because it will conform to both. It will conform to either a flat correction or it will conform to normal triangle, and we will be looking to break that to the downside. And again, like in the past, it's not possible to say categorically what's happening. One must never do that, in a sense that we get too rigidly attached to a particular view. But I've outlined what I'm looking for me to confirm if we have the top, and until that is confirmed, we would also keep our options open to say that maybe we haven't got the top, and after that particular decline, which could actually turn out to be like so, it could turn out to be 5 wave down, ABC, another 5 wave down, and then back up, then for example another leg up, although that would not conform to anything like flat correction. And if we do however get that, then quite possibly we've got a very complex correction going on here where you have double and triple zigzags. So maybe that could happen, and in which case we could continue to trade sideways for quite some time if we didn't break out of this triangle, and if we didn't get a confirmation that we're looking for to say that the top is in which case, you know, what we might have is like we had ABC, then ABC back down, ABC up. So one of these will probably become a connective wave. So we'll get ABC up, ABC down. So maybe then this one will become connective wave. Then we will get A, B and C, and in which case we've done wave A because of 5 waves, retracement back wave B, and then another wave C back up. So that will become a double zigzag. So ABC, ABC down as one zigzag, then ABC up, ABC down, and ABC back up with this leg going up as a double zigzag. So instead of these 5 waves, we finish up with a double zigzag. Okay, but I'm not expecting that at this moment in time, but that would be the possibility if we didn't get a follow through after this what appears to be an impulsive wave, and our confirmation we're looking for doesn't develop. Then we might have to reconsider, but otherwise the top could well be in. Okay, so keep that in mind, and we will now consider euro pairs in that particular context. So we'll go over to the euro pairs, and the first one we're looking at is euro pound. And the euro pound, we've got this we've had this very narrow rising trend channel which was carving out wave 3. Then we had ABC retracement down here as a wave 4, and possibly we have wave 4 already in, and we are now looking for developing this wave 5, or this wave 4 correction is not finished yet. So let me just stretch this out a little. So after completing this wave 3 here, we had looks strange, it doesn't look like an ABC. Yeah, you know what it could be? It could be this one doesn't look like an ABC. This looks like straight impulsive leg. I think what we've had here is wave 3, this ABC retracement wave 4, and maybe this one is a truncated wave possibility. So that's a wave 5 possibility. Or we've got wave A down, so this one doesn't exist, in which case alternative would be is alternative wave A, alternative wave A, then we've got A, B and C. So we've got like an expanded flat. So that one could be alternative B, in which case we would see another leg lower, and that would become wave C. Okay, so in this particular period there's no trade really. Shouldn't enter any trade unless you're doing intraday trading really. But what I'm expecting is if this one is A, B and C, then that forms the wave B. So alternatively, after the wave 3 finished here, we have alternative A, then A, B and C to give us alternative B, and then we're going to come down in wave C. So once we come to that sort of area, then euro will start edging up against pound again, and this wave 4 will come over there, and this one here doesn't exist for the time being. Okay, so and this wave 5 will be over there eventually when we finish this flat correction and we move up. Okay, so that's what I see developing with the euro pound. However, this is dependent on euro regaining its relative strength, because I think pound is about to switch to the bullish side. So in order for euro to regain against the pound, it has to be even stronger, and in which case it would suggest that the euro would really start making a strong new high. Alternatively, pound will miserably fail, and in which case euro will remain stable. So relative to pound, euro would strengthen. But in this particular area, if I get this leg down back to this sort of area around 84, maybe 84.50, I would only then consider going long if we were looking for a long entry. Okay, if we were to alter any of these trend lines, it's really not possible to draw any trend lines. They're all tentative trend lines for the time being. But let me see if we did this one here. I think it wouldn't really help. I think we're just guessing here now, really. We ideally need to know what's happening here before we are able to consider any sensible trades. So I'm expecting euro to weaken against the pound, and this is not because euro is going to become weak, but the pound is, I think, going to gain strength against the euro. So that would cause this correction, and then both euro and pound will start moving up, but the euro will be relatively stronger than the pound, so it will start edging up. Okay, so for the time being, I think I'm expecting some further downside, and we might have a flat correction, expanded flat in fact. And this is the only other thing, is that if it remains below this line, then we are expecting a further decline to this 84.50 area. Okay, so at that stage I might be interested in getting long if we're going to trade pound euro. Otherwise, this will help us in timing our entry against other euro currency pairs. And in the shorter term, you've also got this possible trend line on the RSI on a 4 hour. On the daily, of course, there is not possible to draw any trend line on, but on the 4 hour you might be able to draw this trend line, and whilst it remains below this trend line, then we're expecting this next leg down. Okay, but then after that we can consider going long. It's euro pound. We look at euro CAD. Now the euro CAD, as you know, we have come down from quite a way up on the left, formed an important bottom, and we've started going up, and in so far we've got wave 1 in bracket, then we've got this expanded flat as a wave 2 in bracket, and we are currently in a wave 3. And as I was saying, that wave 3, although it looks like it's finished here, is probably not the wave 3 in entirety. I think that would be the first part of the wave 3. We are currently in the process of retracing for wave 2 as a part of the wave 3. So within the wave 3 we get 5 waves. So this is the first one, retracement 2, and we are looking to go long. So really, rather than euro pound, it might be better to possibly consider going long on a euro CAD, if you feel you want to trade this particular currency. And you can see from the bottom here that we have gone up in what appears to be possibly 1, 2, 3, 4 and 5. The wave 5 would look a little different. I'd like to look a bit more sensible, but within this sequence we might have this kind of a concept. this kind of a concept. Okay, so what I mean is that after this 3 was done here, we moved down in wave 4 over here, then we had wave 1, 2, 3, 4 and 5, which like a ending diagonal. Okay, so after the wave 5 was done, we got A, B and C down. So in a normal sense, A, B and C actually completes the correction. However, that might be the first zigzag, A, B, C. So we have now also got A, B, C back up, and I think I'm expecting this one more decline, which would then give us a low in the region of 133 to 133.20 or so. So that would be in this area here. Okay, now if I draw this trend line from this high to this high, then we got this trend line. So that trend line could come into play as a potential support. And then if you look at it horizontally, then horizontally in this area, you see previously there was a lot of support in that area, broke below, potentially became resistance. So we broke above, so we come back to that area. I would expect that to be potential support. So if you are looking to get long on a Euro CAD and you feel you want to trade that particular pair, then I think you can start stoking the long entry on a retest of this last low on 4-hourly chart, or maybe making another small minor lower low. Also, in addition, I would draw this trend line on 4-hour chart, and I'll change the color of that one to brown. Okay, so whilst it's under that trend line, this channel line of course is now complete, so we don't need that one. So as long as it's below that, I'm expecting it to come down, and we'll be looking for it to trade low into 133 to 133.30 area, and I would look to go long in that particular area. If we did a low there, we've got no other structural low in reality to put our stop behind, as it were. However, once we come into that area, I'm not expecting it to really decline a lot more than that, as I say, because we've got this potential trend line rising up, so that could come into support area. Horizontally, we've just reasoned is a location where we should expect some support. Plus, if you arrange this leg up, then we have approximately 50% area comes into there, 50% area. So those things combined, 50% comes in at 132.80. So somewhere in that area we should be able to get long, and we would have to enter initially with possibly say about 100 pip away. So your position size should be such that you do not suffer more than 1% maximum, and you position size in such a way so that you're only risking 100 pip or so, but that would be catastrophic if you begin to see that when it comes down. That's the other thing. You see, we are looking for possible entry there, but see on the RSI, see we've got a low with the RSI on this 4-hour chart. RSI has gone back up with the price, so next time the price comes down, RSI will probably not come back to the low. So that's the other thing, is that RSI might only come back to here. Make that a thicker color line. Okay, RSI won't come back all the way down there. So what will happen is the price will give us lower low, but RSI will potentially give us higher low. So those are few different combinations we are looking to get, confirming our potential entry. And then we'll enter with a view of 100 pip stop, and then soon as we get into some reasonable profit, like a 70-80 pip or 100 pip, I would then bring it to break even. 100 plus pip, you bring in to lock in few, maybe 20 pips or something like that, and then let it run up and give you another higher high, higher low, in order for you to move your stop below the next higher low. Okay, so we're looking for next low down, RSI to give us confirmation that it's divergence there, plus it should be in the vicinity of 133 to 133.20 and approximately 50% retracement of this last leg, right? And then maybe some kind of a candlestick signal to confirm that the trend is over and is looking like it's ready to move to the upside. Okay, that's the euro CAD potentially going long. Just like the euro pound, we just reason potential long entry in a similar sort of proximity. Okay, so we'll go over now onto the euro Swissy. The euro Swissy also looks like maybe has bottomed or will bottom in this area, and little while back we looked at it that we are expecting another leg higher, but we are not trading this pair at all. We're simply looking at it as a point of interest suddenly, because it has now come back to life after having been in this kind of a range for a very extended period of time. So we're looking at that, but other than that we've got no real interest in euro Swissy. Euro New Zealand, the euro New Zealand now is interesting because just like the euro CAD, it also has done this wave 1 and then this sideways flat correction as wave 2, and I think we are in a very early stage of beginning to move to the upside. And if I drop down to 4-hour chart, you can see this one is possibly looking like a leading diagonal. So we got wave 1, wave 2, wave 3, wave 4 and wave 5 to give us one complete cycle, so we call that wave 1 in parentheses. Then we have this A, B and C potentially there. Maybe it's like a little complex. So we got A, B, C here as wave A, B, C back was wave B, then we got wave A, wave B and wave C. So ideally we want this one to produce a low in this sort of proximity, and then this will be also ready to go up. And in fact, when you find an entry into euro CAD or euro pound, we'll probably find that within a fairly short period of time or round about the same sort of time, we will also notice that the euro New Zealand will also bottom out and start making progress to the upside, because we've got here, we've got you see from the low, we've done this wave 1 in double parentheses, wave 2 in double parentheses, and then we are now looking for wave 3, and within a wave 3 we got wave 1 in parentheses, wave 2 in parentheses. So then the next leg up will be very strong, and I think it will probably start resembling like this one, because all this congestion will be soon over. Then we got nothing between there up to time we hit that one. So I'm expecting some further upside on this one as well. The other thing also, if you remember this horizontally, see here a lot of resistance all the way. We've broken out, so now we are potentially above that area, so that should be acting as a good support area as well. Okay, and then on that occasion we've got this gently rising broad or wide trend channel. We will be looking to breach that to the upside once we start going up for the next leg. And overall you can see how it is beginning to build. See from the short side where we travel down here, and it's an ending diagonal. So ending diagonal means the move is finished. It has come after extended down move. This is the last one down. So we are now going to be going up, and then as we go up, we will begin to start gathering momentum to the upside and get stronger and stronger and stronger and stronger until almost looking like vertical move, like the euro pound, euro yen and some of the other yen currency pairs. That is the kind of move we are going to be having. And if you look at it also, it's not very clear, but say if you count this as a neckline, okay, this area as a neckline, ignoring this peak here, that as a neckline, then you got a left shoulder here, then you got a head here and a very broad right shoulder. Okay, it's not cup and handle, because cup and handle normally come after quite a strong move up, and then you get cup and handle. So this is not a cup and a handle, but nevertheless is forming like a scooping action, and chances are that once we clear that, it would be reasonable to say we have a rudimentary looking left shoulder, a head and a right shoulder. So that also suggests a reversal pattern in addition to this declining trend, which is like a falling wedge or an ending diagonal. Okay, so once we begin to clear this one is just a very short-term target, but in reality our first initial target will be somewhere around here, 181, and there is a plenty of room really to make good money by not taking a lot of risk, starting off with a relatively small position, let it run few hundred pips, let it come back again for a retracement and form a higher low, and in which case you can bring your stop below that one and possibly add another one and gradually build your position. So by the time we really start running up, you'll probably have 3 or 4 different positions already lined up, but still overall the risk would be the very last position you add. Every other position previously you added, they should all be in profit and they should all be locked in with a profit. So if you then get reversed and stopped out, every one of them will be profitable. The only one that will be suspect is the very last one. Okay, so on the last one, on each position you don't enter more than, say, approximately one percentage risk. So if you get 3-4, so as an example, if you start off and you think 1% equals to 1 mini, then you'll be able to get 3 or 4 minis by then, or maybe even 5 minis by the time it sort of gets to somewhere about 173. That's like half a lot. And then after that, if you're able to run to this sort of position here, that is almost like nearly 800 pip. So you quite easily get half a lot and possibly average pip, say about 1,000 pip on a half a lot. So 1,000 pip on a half a lot, if it was one full lot, 1,000 pip would be like $10,000. So on half a lot it will be like $5,000. I really do hope some of this trade will line up and we will prove very disciplined and very systematic in the way that we manage a trade, and not panic out too quickly. Do expect some reasonable retracement where you might be able to scale in, scale out. That would be another way of marginally reducing your risk, but still keeping the core position and then adding to it as opportunity presents. So Euro New Zealand is a very strong trading currency pair for us. Not strong in a sense of New Zealand being strong, but the euro will be very strong against New Zealand, and we'll be looking to build that position on the upside, and we are at the very early stage of doing that. And same with the Euro CAD. And then similarly Euro Aussie. The Euro Aussie a little bit further ahead, but that too has put in a significant bottom here in a very similar sort of manner. Is come from all the way here. Now that downtrend channel is completely clear, as you can see, and currently we've come into this pink line, which is the highest line on the trend line here, you can see, and that we've currently come into contact with that almost, but we should be breaking through that one soon. But it's a bit interesting because on this one we did have a fairly strong move up, then we did a fairly deepish cup, and we did the handle. So you got cup and handle on that one for sure. And very interestingly, you've got this 200 period moving average on a daily chart, which comes in and is apparently been supporting the price action very strongly. But also we have this trend channel running, which is simply a freehand drawing trend channel connecting the low and higher low, copy pasting that same line and putting it on the high here, and then putting the other one in the middle to pick up these lows and this high. So you alternative pivots, and now currently we are straddling across it. Okay, but we should be soon breaking up through that. If I drop down to 4 hour, then that same period 200 period moving average on a 4 hour chart again is coming very strongly into a line where we could find that as a potential support to the price line. But more importantly is that this area here, what does it look like? To me it's like a triangle, and remember where the triangle comes in wave 4 or wave B. So here so just to cast back, see we got this big one here, wave 1 in parenthesis, wave 2 in parenthesis. Now we are in wave 3, and within the wave 3 we've got 1, 2, this one is 3, and this triangle I think is a 4. Okay, so this here is 3, this is 4, and we should be breaking out of that one to make 5. And for the time being I'm showing it like over here being 5, but it can be further up. And remember also wave 3 have a habit of extending, so maybe what we've got here in the end we might finish up is that this 1, 2, 3, 4 and 5 will only form first part of the wave 3. Okay, so it won't be the end of wave 3, that will be the wave 1 of 3. Then we'll do a retracement, a small retracement. So I put here wave 1 in parentheses, but maybe that won't be the case. What we will actually have is this one will go all the way over here. This first leg will get 1, 2, 3, 4 and 5, and that's where the wave 3 will actually finish. Okay, so if I was to, for example, take this away, then wave 3 will finish there. So what will finish up is the 1, 2 and 3. So it's got a long way to run. So if it becomes extended, we will note that, but for the time being in this cycle we've got this -1, -2, -3, this triangular potentially -4, and then going in for a 5. So if you're looking to get long on the Euro Aus, then this is the way to do it, is that it is tracing out a triangle. It's got a wave 1, wave A, B, C. If I would just put the C here, C, this one here as a D, and possibly this next leg down. So remember now what is happening in a Euro Pound we're expecting a leg down, Euro CAD we're expecting a leg down, Euro New Zealand expecting a leg down, Euro Aussie expecting a leg down. They're all telling us the same story, and that this triangle becomes even better entry because we have a converging triangle. So we have a structure. If we enter long, then we have a structure under which we put a stop. So if we get a long around 129.70 area, say for example, then we put a stop below this last low here. So we're only talking about 50 pip stop loss. Okay, and if we have any existing positions running, we should be able to bring those stop losses to 40-50 pip below whatever the low is here, and we'll be looking at that point. If we've already got existing position, we'll be looking to add here, and if you've got no position, we can enter a new long position in this area around 129. I'll say the lower end probably 129.50, and the higher end could be somewhere about 130. So 129.50 to 130 is where we are looking to go long. If it gets to 129.50, that would be the best, because that will bring us right into this minor trend line, and we're similarly expecting divergence on the RSI, just like the one I pointed out on the New Zealand Euro New Zealand pair. We want a divergence here, right? So divergence there with the price coming into here, and triangle being confirmed, we should be able to get long there. And if you're able to enter 50 pip stop loss, then you might be able to start off with a position there little bit higher, because you're not having to put 100 pip. So in that case you can enter effectively like a larger position, okay, than you would have ordinarily done, but still overall keeping 1% of your total capital at risk when you enter that particular position. So 50 pip will allow you to enter almost double the size, so you would be hopefully able to adjust that fairly quickly to break even, and then lock in profit and work it forward. So Euro Aussie, out of all of them, I think is the best pair for trading euro against other currencies. It is better than Euro Pound, it is better than Euro CAD, and the Aussie and New Zealand, I think the Aussie has been the weaker of the two. So from that perspective, the Aussie fits the picture better, and structural wise it gives a better clean structure from which to enter long. But we can use the others to confirm when we get a trade lining up, we should be expecting the same sort of thing happening in the Euro New Zealand and Euro CAD also. Okay, the other currency is the Euro Yen. Now the Euro Yen, you can see has a hit of an upper rising parallel of the pitchfork. Also on the RSI, we've been getting several degrees of divergences. However, we are currently congesting in that area, so that would suggest to me that we probably got at least one more push up possibly to give us a triple divergence, when this currently the wave 3 we are in is going to be completing. Oh, not that one, is this button. Okay, so there we'll be looking for this fairly clean sharp rising trend line or trend channel is still encompassing the price action, so that we are still in a part of the same wave, whatever that wave was. And I think that it is a wave 3, so this one appears to have already extended. So we go 1 2 3 4, and we're coming into 5 over here, which is where this wave 3 in parentheses will end. Then we'll expect a wave 4 retracement. Over here it will probably rise up now because we drew this out when the prices were at a lower end. But I wouldn't necessarily enter long on the Euro Yen, because the this current upside could finish fairly soon. Then we're expecting this reasonable retracement, and then all yen pairs will do the same. So in that respect, I think it is not appropriate for us to consider going long on that one. But if we did want to trade long, we might be able to, and we might be able to do that possibly when we get a reasonable retracement from where to plan our trade. Okay, so for the time being, we will continue to just monitor that one, but no immediate trade on there. And I certainly wouldn't recommend a counter trend trade, because if it continues drifting higher, we'll be unnecessarily taking a risk. Right, so that's most of the euro pairs done, except Euro USD. Okay, now before I come to the Euro USD, let me just show you something I tried to explain to you yesterday. Okay, so this chart is an overlaid chart. The one in a blue is German DAX index, and the reason why I'm showing that is there is a question of whether the euro has finished and topped out, and whether it will be coming all the way down, or whether it's retraced enough and it will be just simply shooting up. Okay, so if I just simply show you German DAX on its own. Okay, so this is German DAX on its own, right? Now from the top here it looks like the 1 and 2 on a 4-hour chart. Okay, 1 and 2. Then we got a wave 3, and wave 3 is counted with 1 2 3 4 and 5. So that's 1 2 and 3 done, retracement 4, and we should be expecting a wave 5. Now we've not had a wave 5, and some of this thing I drew out here hasn't actually materialized. Okay, so what we're expecting is 1 2 3 4 and 5. So that's wave 3. This one is currently retracing 4. If this was a 5-wave move, then we should be expecting another leg lower to complete this. Okay, otherwise what we got is we got A and B, and then we got C, in which case A, B, C, D and E, right? So in both cases we are expecting some further downside, and the current we moved in ABC, so this is possibly wave 4 or a wave B. If this is wave 4, then we expect a wave 5 to form, like so, which is where the A will finish. This A will finish. Otherwise, we might have in here, if you look at an hourly chart, just about make it. So instead of this being 1, what we've actually got is probably this kind of an action. Okay, in which case the 1 comes in here, so that looks actually better, looks a lot better. So this one becomes wave 2. So this is the leading diagonal, and we got 1, 2, 3, 4 and 5. Okay, so that's wave 1. Then we go ABC retracement, wave 2. Then we got this as a part of wave 3. If you look at the RSI, then RSI suggests this is wave 3. Okay, so you got 1, 2, 3, 4 and 5. So this one is 3, this one is 4 and this one is 5. So that completes the wave A. This one completes the wave B, somewhere over here. So we got wave A, wave B and wave, looking for wave C now. Wave B done, looking for wave C. So that means that if you now look back, then possibly the DAX index can have maybe few days of weakness. If you look at it on a daily chart, then it's almost impossible to know what that wave is, other than saying, for example, going from here is we've got some kind of a wave A, this is B, and we're looking for C, and within the C we've got, within a C up to here or even up to here, we've got wave A, B and C. Okay, so A, B and C. This one coming back could be just wave X, that could be just wave X. I'm looking for possibilities and I'm showing you how I'm reasoning it out. So that could be wave X, in which case we won't see ABC zigzag down with the wave X, and in that case we would simply see DAX index taking up. Now remember, we are saying the equity market likely to continue higher. So in that case it suits me better to say this 5 wave down was simply wave X and we are going to continue higher. So we've got minor A, minor B, minor C, wave X, and we do another zigzag on the upside. That actually fits better. However, if that was not the case, then we've got 5 wave down to give us a wave A, we've got wave B almost done, so we must expect a wave C to the downside. Okay, so either way, it is possible that either we can call this, instead of A, wave X, or ideally we can call this one wave X when the wave C comes down. So DAX index could possibly weaken a little bit, but and also looking at this up leg here, it's not as strong, it looks very overlapping, so maybe that's a corrective. So maybe DAX should have another leg down, even if it means generally, even if it means equity, for example, because the thing is that if I look at this dollar index, see, in this dollar index we've got 1, 2, 3, 4 and 5. Remember, we're only expecting a little further fall in the dollar index. That could happen during the night, probably by UK session or in the UK session or before UK session opens, and then we would expect ABC retracement to the upside. So if that happens, then I think during that time I could expect DAX also to make this next leg down. Okay, if it made this next leg down, then that would complete A, B and C. Right now, in similar manner, if we overlay the chart, then this is what I'm looking for, is that the DAX has done 1, 2, 3, 4 and 5 to give us wave A, is retracing to wave B, and we're expecting this wave C to come down to the downside. So in the same way, the euro also has done A, B, C, okay, and maybe euro is already done, because sometimes what happens is that the euro leads and sometimes the DAX lead. Okay, so here for example we found that the DAX topped out first, then the euro topped out. Okay, so here we could be having a situation where euro has bottomed and the DAX will bottom soon, or we will find euro will with the DAX come down and then take off to the upside. So that, as I say, could happen during the time when the dollar makes a small retracement after a small leg down. So in that case, during the night, this is what we could expect. In the Asia sessions, we could expect euro to go up a bit more. Then during late Asia session and early UK session, or maybe even in the UK session, we can find euro sell off again a little bit. Then by the US session, we can expect then the UK market, US market would go up, and the euro and all the other indexes would go up. But in which case we would probably find 30 to 50 area, or just slightly lower than 30 to 50. We would probably find euro bottom out to start going up. And currently on the upside, we're expecting 135 40 to 135. Is it 35.40? Let me see. 34.50. Okay, so here in the euro we've got A, B and C. Then this here is corrective wave ABC, just like the DAX index. So I am expecting euro to maybe have a little bit more upside from where it is now. Okay, so maybe euro will get up to 134.50, and then after 134.50 I'd expect euro to come back down to 132. Well, retest the last low at 133.50 to maybe 132, and then the euro to start heading up, and euro will then head up to probably take out the last high quite easily, most likely maybe 38 or even higher, maybe even 140. It's quite possible. And in the ECB's press conference last week, President Draghi said that 138 is a long-term average. He was saying 138. Some are making noises that euro is overvalued, but Draghi was saying 138 is a long-term average. So price could fluctuate on either side of 138. So I suspect that if we have in the dollar index, if we already have the top and we've got almost wave 1 done with the 5 internal waves, we do ABC retracement, then this third one will be strong downside. Then I think that this will be most likely the scenario, is that euro would just make a low around 132.50 area, as I just outlined, and then euro would take off, that it would then go up into something like 138, 140 quite reasonably well. And if that was the case, then there is an alternative wave count that I will just simply line out to you, so you are able to keep that in your consideration. Where is it? Not that one. Been toying with couple of different wave count just in case which one actually comes up, but I think no, not that one. Okay, I'll use this one. See, previously maybe here, I think. Yeah, previously on this particular chart I was saying that we've got small 1, small 2, and then all of this right up to here is wave 3, then wave 4, and we are now looking to go into wave 5. Okay, that's what we were saying. But it may also be possible that this is 1, this is 2, and somehow this high, September high, is wave 3, this one is 4, and we are now making a wave 5. And within the wave 5 we've got small 1 here, then A, B, C retracement, this low which is the 129, 130 area, so that's a wave 2. Then this one, what we've just done, is a wave 3, retracement 4, and we're looking for wave 5, the final wave 5. So for the time being I'm thinking it's going to be 138, but you know, it could get longer, in which case we may be looking for touching 140 area, but 130 is quite a really realistic area where I'm expecting euro to go. So that's a euro USD. So all the euro pairs are done now, and in contrast now what I wanted to show you is we won't dwell too much on the dollar Canada, because dollar Canada, I think, like with the dollar index, I think it has already topped as well and is beginning to start making a wave to the downside. Okay, I don't think that it is going to go back up. So here is wave A from September low, zigzag wave A, ABC zigzag wave B, and then we've done a wave C. And I think we may well even have this one, although it looks very strange and you know, uncertain, it might even be the first wave down. If not, then this is the last wave up. It's 1, 2, 3, 4, and 5 is a truncated wave end, and we are looking for fairly strong wave to the downside. So if we were to look at dollar Canada, then you see this one here is very strong, very powerful wave to the downside. But we are not trading this currency pair until we get a clear direction, because of the very fact that it has been very difficult. When it doesn't do anything, it just simply goes sideways, and there's no joy in being into a small thing like that unless you're doing intraday trading. But we are looking for a big trend. So either dollar Canada will start making its way down and confirm that it's in a clear new downtrend, or we might find that in fact dollar Canada would decline a little bit and then probably make another one final leg up, and that's when it will be ready to short. Okay, so if it did that and went back toward this declining lower upper parallel of the pitchfork, then we would be looking to short in the region of around parity or 1.01. So until then we'll just watch with interest, see what happens with that one. But the one that is the real trade is the pound dollar. Now, you know, I've given extensive details about pound dollar, and maybe that particular video, if you kept it, I'd suggest you go over it again for all the reasons why pound should be bottoming out. Unlike everybody else is saying the pound is going to collapse, I don't think somehow. And my I have been saying this for some time. I think you, for those of you with me, know that you know, for quite a long while I've been saying that the dollar index is going to go down, you know, big time, and probably make historical new low, and in contrast we will have all US dollar pairs gaining against the dollar, and therefore I do not think that the pound will be an odd one out where it also continue to collapse with the dollar extensively over a long period of time, although recently it did act almost in tandem with the dollar. But longer term, what I'm expecting is after this big decline, we had ABC retracement wave A, then I think what we got is ABC retracement as a wave B, and really we are in a new leg up, just like that the oil chart we were looking at, where we had wave A retracement and wave B. So in this case, some of these numbers that are put on there really is only what everybody else is putting traditionally, that this is a triangle and is becoming A, B, C, D, E triangle. I don't think somehow that is the case. So what I am expecting is this big wave C to go over there. So we've got wave A, wave B, and then we are looking for building up a leg to go up to wave C. And I think this one is, we can say, minor minor A, minor A, and then this one here is a minor B, and that minor B is really where the June low was last year. Okay, so since then we are beginning to go up. So we've done ABC up to give us wave A in parenthesis, ABC back down as a wave B in parenthesis, and effectively if you look at the June low, that's where I think this wave B is finished, and we should be now looking for new leg up. Okay, so in the new leg up from the June low, we've done wave A, B and C back as a wave B, and it's this element that has given me renewed confidence that we have the bottom in pound. Not possible necessarily to guarantee that we have a bottom in pound, but I think we have a good case for expecting a bottom there, because majority of the people were looking like this is going to break down and the pound is going to collapse, it's going to go through the floor, and therefore there were a lot of extreme sentiment in this area where a lot of people were shorting, and we know that majority of the people get it wrong. So this is what was the other confirmatory factor. And the third one was that on the futures contract, unbalanced volume was giving us divergence, plus on momentum indicators RSI is giving us divergence on the daily. So we've had a lower low on the price, but look on the RSI, we're actually getting higher high and higher low on the RSI. So all those things are lining up, plus it's come back into the vicinity of almost like 78% retracement, and then few of the fib ratios lining up there. But mainly the Elliott wave suggests that when you have an impulsive wave to the upside or to the downside, doesn't matter, you get a retracement, and if the retracement happens to be flat correction, so in other words not simply A, B, C zigzag, you get ABC here to give us wave A, ABC back up to give us wave B, and then we've got wave C down here. So this is wave A, and B is like an expanded flat in this case, or it could be flat in some cases, but in this case is the expanded flat. So you get ABC zigzag wave A, ABC zigzag wave B, then we get a wave 5 in the wave C. So we have had a wave C and we've had a 5 waves, and the 5 waves are complete and is very mature. If you look at in a 4-hour chart, you can see the 5 wave count in the sense that we had a wave 1, wave 2, wave 3, and then all this messy is A, B and C. So it's an expanded flat within this cycle, wave 4, and then this one here, wave 5. Now I think the bottom is already in. We need a confirmation, but you see, if this was wave 4, which is where I said here, wave 4, right, then we are looking for wave 5. So in a wave 5 we want 5 waves, right? Now you can confirm with me that there are quite clear 5 waves: wave 1, wave 2, wave 3, wave 4 and wave 5. So I think the bottom is already in. If you look at the RSI on 4-hour chart, then you can see we have divergence in the RSI. So compare with this area, compare with this low, we are well below that, but the RSI is higher, and we have a RSI divergence on the hourly, and we have a last leg down as a 5. If you look at this on a daily chart, or sorry, daily chart, also you get potentially a reversal hammer, reversal pin bar. Okay, so I think everything is in place for the bottom to be in. All that remains is getting long. So if you look at a 4-hour chart or an hour chart, see from the bottom we've got A, or rather 1, 2, 3, 4, 5. So in the up move we've already got almost 5 waves in, almost. I don't know whether this one is done, but it's almost there. Okay, so if you look at the RSI, we should be soon expecting RSI to turn back down. So I think that initial 5 waves could be in, which means minor wave 1 done, within which you have 5 waves. Okay, so somewhere in this area I expect on hourly chart 5 wave complete, then we would get typical wave zigzag down. And if you were looking to get long on the pound, that's what you would do. You would expect the pound to do this. Okay, so basically retrace. How much? Well, it's the first wave, so it's easy to expect first wave to be retraced from 50%. Okay, so 50% will bring you to somewhere in the region of 156 area, approximately 156, either 50% or slightly below to maybe 61.8%. So that will give you 156. So around 156 we can enter long, and then your stop will be just below here. So potentially we'll be looking for maybe between 60 to 70 pip initial stop loss to get long on what might turn out to be, I think, very, very rewarding trade. Very rewarding trade. And you can look at this in any number of ways. You can see we had a steep plunge and steep rise, and it's given you this W pattern on hourly chart. See, W potential reversal. You can also call this one like head and shoulder, that you got this kind of a head, you got shoulder, and we'll get a right shoulder when we get a small retracement potentially. Okay, but I think that's enough really. Everything else suggests to me that this is the bottom. So if we are wrong, then we'll have 60 or 70 pip. So you go in with the view that this is the maximum risk is going to be 1%. So you lose no more than 1%, right? And also the fact that this is 50 pip, you might be able to put in a slightly larger position than you would have done ordinarily, where you have to keep like 100 pip stop loss. Okay, and then basically on the upside, you know, our immediate target would be this here, this high, 163, 164 area. That's our immediate target. We will get some retracement along the way, but I'm not expecting any to actually reverse the trend or cause significant retracement. So we will get a new trend to the upside. We'll get a nice clean channel hopefully fairly soon to apply on it and get long. So if the pound is potentially getting long, then I think likewise you should be able to look for an entry into pound CAD or pound New Zealand or pound Aussie. So with your permission, I'm going to go over that a second and only just look at the pound CAD. You can see, for example, the bottom is already in and is gone up in what appears to be 5 wave. Okay, it's 1, 2, 3, 4 and 5 possibly. We are retracing, so retracement is quite deep. So either it will come back fairly deeply, or this is probably all we're going to get on retracement basis. That's a pound CAD. But remember, pound CAD is very unpleasant looking chart. So I would not necessarily go long on using pound CAD. Okay, instead pound New Zealand is much better and a cleaner looking chart, daily trend, much cleaner, and it will probably be better because New Zealand and Aussie dollar are going to be weaker in comparison to the Canadian dollar. So again, this one has moved in and is actually coming to make a final low. So it's really brilliant. It got a divergence on a daily chart. It's at the level where we should expect divergence, and also interestingly is if you look at the major low we had over here, right, we've just breached that marginally. So in other words, we've just taken stops out, or there'll be a lot of people who will have entered short and are currently caught on the wrong side because it broke down below previous one, so they will have entered short. Many will be looking to enter short as well. So if we get, if we get anything to encourage them to enter short, some will be looking to enter short, and others who have already entered short will be already underwater, and they will have stopped somewhere. I don't know exactly where, but they might say last significant. Some will have been taken out. If they've got it above here, then they will be taken out when this one start moving up. But you can see here on this 4-hour chart, this last candle is a pin bar, and I think the bottom is in, and I think it should be able to really enter. If you did enter this one now, right now, without taking anything, throwing caution to the wind almost, then even then the 120, 130 pip possibly below the recent low we've had. Okay, so there you'd only be able to enter with a very small position, but then be able to adjust that fairly quickly. And I think that the bottom is in. In this area I wasn't sure exactly, but I think what it is most likely is that this B should have been there, and we've had a 5-wave down, so his bottom is already done. Then we had a move up which looks like 1, 2, 3, 4 and 5. So this ABC looks like a deep retracement, and I'm not expecting this to go a lot lower. I think we are really ready to go long on this one. So you have to make a decision on which particular currency pair you will be looking to go long using the pound. You can't do them all because you don't want everything dictated by the pound's relative strength or weakness, but either pound dollar or pound New Zealand or pound Aussie. Pound Aussie in exactly the same sort of situation. Okay, that one apparently had a slightly different pattern in the sense that it had been going into a contracting triangle, but it looks like this one was a wave 1 ABC retracement, and Aussie, pound Aussie might actually even be leading. And what I mean by leading is, I think if I take this away, take that away, then I think over here is where the bottom is. And then what we've got there, to me it looks a little unusual. It's like an expanding. So normally when you get a leading diagonal looks like this, rising wedge from the bottom. Okay, from where we get breakdown and then up. In here I think what we have is 1, 2, 3, and it's got 1, 2, 3, 4 and 5. So 3, ABC back up 4, and then this one 5. So it's an expanding diagonal, expanding leading diagonal. And there we've got A, B and C retracement, which is again retraced 50%. So if we were looking to go long, then I think this pair is almost also ready to go long. It has retraced 50% approximately. Take off these what we don't want. Okay, retraced 50%, and is produced a potential. If you look at in a 4 hour, if you look at a 1 hour, then you can see this big, see this one here, a big reversal bar in blue. So I think we are pretty much there. If it's not already, we will do very soon. But on a 4 hour, you can see that we've had a red bar down, which closed back toward the middle, not quite to the middle, but back toward the middle of the range of that particular 4 hour bar. And then subsequently we have a few indecision bar. So it's a question of how that indecision bar will develop. It may be that we might actually see another small low, and then it'll be ready to start going up. Okay, so pound Aussie is also ready. So really pound Aussie, pound New Zealand, either of the pair, you should be able to get long using small leverages to go long, and hopefully then over next few weeks and months you'll be able to ride those positions even with a small position I'm very hopeful. I think, really, if we were to take like an absolutely easy trade with really literally no real sweat and not worrying about intraday where the price is, come back and check if you got the time at the end of the day, otherwise don't really bother even. Come back and check at the end of the week, that kind of attitude, and then providing that your initial position is secured as soon as you enter and you get about a couple of hundred pips in your favor, lock in 40-50 pip, break even plus 40-50 pip. So if you stopped out, you get 40 to 50 pip in your profit. Other than that, you let it run and then you look for another significant retracement. So if it goes up, few hundred pip, 300-400 pip, comes back a couple of hundred pip and forms a higher low, at that stage you bring your stop adjustment just below that, and if you think that you want to enter another long. But if you just enter one mini lot, I am very confident if you just one mini lot, look at where this is going to go. See, we're going to go something like this. That's what pound and all the other yen pairs did against the yen, and this is exactly what we do. We're coming down, we finish the bottom and we're going to go back to the other side. When you go back to the other side, everybody who's been in this range, horizontal range, since 2010, so we're talking about nearly 2 years, 18 months, been in this range, will soon realize that we are now going on to the other side. So there will be a lot of new people wanting to start joining the new trend. There will be a lot of people who's got a position trading. They'll have stops probably just above this horizontal area here. They'll be taken out and pace will accelerate, and then we will begin to go almost like that, almost looking like parabolic. So we are at the very beginning of the curve. Even if it's simply out of this is not the high, there's some more further price action above there. We don't have on this particular chart here, but even if we simply went up to there, that is 2.2 or 2.25. I mean, the distance is nearly 7,000 pips. So as a very rough gauge, and say 1 pip equals $1, and just ride it with one mini lot, it might take you 5-6 months, but you'll have $6,000-7,000. Maybe this is too simplistic a view, maybe it might not even happen that way, but and of course on the way you do remember that we might get 400-500-600 pip against you also, but you see over here, price went up, that was nearly 1500-1600 pip. Okay, so this is the sort of thing. So if we ever think it's going to be that kind of retracement, then maybe scale something out and leave the core position in, and then add it back when you got a substantial retracement. You see each of these, this one is nearly 1200 pip. So when we on the other side, I don't expect anything different. See, this is nearly 1500 pip. Along the way, even if you call minor retracement, this one here is nearly 1200 pip. So that's the sort of thing we got to be prepared for and not panic out. But we know our sight is not only set here. This is the first interim target. Subsequently, we got to be looking for 118 and higher. So in the process of that, who knows, we will be gratefully favored with some kind of a rising channel. Like on the other side, we got declining channel. So if we get a rising channel on this side, like so, for example, a large rising channel, and then within that you'll start getting a very small narrow channel, which will happen like it's happened in the yen, right, and it's happened in euro, pound, and etc. So when you get into something like that, we know whilst we remain in that channel, we can stay long and keep adding. But once we start approaching toward the end, we are mindful of that channel breaking. If the channel breaks, we can scale some out, let it then come back and retrace. We can then add them back at a later end, and when that kind of retracement happens, it will be like 1500 pip, 2000 pip back down, right? So that will happen. So I'm just saying all these things to try and help ourselves get mentally orientated in rising this big trend, because believe me, majority of the traders, and I mean almost including myself and many of the traders, probably 95-96% of the traders don't ever trade this kind of big trends. One, because sometimes it takes a long time for this kind of big trend to actually to happen in between the trend, but we are now at the beginning of the new trend, so we are, you know, in a very fortunate situation. And the other thing is, the whole trading industry is focused on intraday, getting 40 pip, 50 pip, 100 pip, and everybody, you know, boast and make song and dances about having quote 100 pip, 50 pip today, you know, and maybe lose 100 pip tomorrow. And look at the stress. Look how frequently you have to watch. Look how many different charts you have to go through. You know, 1 hour chart, 15-minute chart, 1 minute chart. But this sort of thing, I think, is going to be fairly good, I think. And I hope we'll be privileged to travel together over the next few months and score some big score on a thing like this one. The other point I wanted to show you, I won't go into great length of that, but just wanted to show you, is that on the pound, we know, for example, where we think we are going, because if this one lines up, then on pound we're expecting a minimum to go to something like 180. Okay, 180. It will take a while, I agree, but you know, we'll be patient. So 180, and in the options here, if you went onto the pound, and this is the Trade Monster platform that I've told some of you, if you're looking to open up the demo trading account with them, it doesn't cost you anything. But this is the they're properly regulated brokers in US, and we don't know how long, but see, this one can give you December 2013. They won't give you anything longer than that, but December 2013, so it's enough for us to get going. So initially I might go in and say, for example, either a June or September contract. Okay, so June or September. So say you took September contract, so you have plenty of time, so you don't get time to run out. That's the important thing. And later on, as we progress, we'll get, you know, like a February, March 2014, and you know, other months added, and we will then readjust our contract. But this one is September 2013. Okay, and remember, if we're looking for big trend without losing a lot of money, putting only small element in it, but then expecting that to remain there for maybe 5-6 months, and then go in with a big bag to bag it all up. Okay, so, and if you get it wrong, then we're only going to get it wrong and lose only small amount of money. So we should not really be afraid of any major drawdown, but still have a sizable position on the trade. So this is what I'm going to do. So in September, I think this pair is going to go to 170, 180. We just said now, didn't we? So let me see. If I go in and we say, okay, over here, they're almost like very few people trading in that area. There seem to be a reasonable level of trading in this area here. This one, for example. Okay, so this one is at 161, and the price currently is at 156. And remember, we're looking at September. So if I went in and say, you know, buy option for September 2013 with a strike price of 160. So at the moment the strike price is 156. So we are really quite a way up. It might take us maybe say a couple of months for a couple of months for a price to actually get there, 161. But at the moment, this one is costing us, I think this is because the market is closed. So you got 30 cents and 340, but you know, technically I would be looking, actually let's consider the other one. Let's consider this one here. I wouldn't actually look at this one, but I'm only going to show you this one. This one, if you look at it on buy, then it's 276 to 261. Okay, so you can say during the day, you can say between now and then I will go and enter price at 261. So you can alter that price to 261, say, right? And an order, so each this is in number of shares, okay, in blocks of 100. So one block of 100, each within the 100 will cost you 261. So if you do 100 times 261, then that means $2,600. Okay, $2,600. Now that's a lot of money to actually put on risk, but I'm showing you this because this is 261 to 276, so it's as live as you are going to get. But in reality, I wouldn't do that. What I would do is, when the market is open, we may be able to find a better figure here. So I would go out to say 161 or even 165, but here you see you haven't got any figure, it's all zero, so you can't really indicate. But maybe over here, if you went and do this 161, I will check the price on it tomorrow and just see exactly where it is. But I wouldn't say, if I went in, I would say, depending on what the price is, I would edit that and probably say 0.05 or something. Okay, so I would place an order on there, 0.05, and then put in the good till cancel 60 days. So if, for example, we find that tomorrow pound has a bit of retracement, then we may find our order fill. Our order will fill at that. Okay, now assuming it fills at that, then I'm going to show you this just to get you familiarized. So if you went in and paid 50 cents for each, and you bought, say for example, 1,000 of those, right, 1,000 of those, so it will cost you $500. That's the maximum you can lose. You cannot lose any more than that. And even if the price from 156, it drops down to say 152 or 154 or anything like that, then it's gone against you. And say if that happens over the next 3-4 weeks, so for a whole month it goes against you and you're committed, then maximum at risk is 500. You got no more. But remember, we've got September, right? So we've got literally like another 5-6 months after that. So then the dollar will turn around and start coming up. I think it will start going up almost straight away. But even if it didn't and it went against us for 3-4 weeks, you've got no worries about adverse drawdown on your account. But if you just look at this and say, if it gets to 161, then what you are buying now for 50 cents, that is going to be close to valued around 380 to about $3, 161. So it's 380. You can see in orange ticket there that if the pound dollar gets to 161, then your contract price could be almost, this is theoretical mind you, it will be almost worth like $4. That's 4 times. So if you put $500 at risk, and if we get to 161, that contract 161, say in the next month or two, your value of 500 will be worth close to 2,000. If, for example, we find that between now and September or July, say the pound dollar gets something like 170, then what you're buying for 50 cents is going to be worth close to $8. So your $500 investment could be worth almost like $6,000 to $7,000. Now that is something that you can use. You can have all the advantage of leverages, an almost guaranteed amount that you will not lose any more than the 500. And even if the market goes against you, you haven't got to worry about a drawdown against your account or a margin call. But if we're completely wrong, then you lose $500. Now many of us have probably lost $500 in a week and never had a chance to recoup it back. But on this process, if we got half of our analysis right, between now and September, if nothing else, we'll probably get the $500 back. Even if the pound simply rises from where it is at 156, say for example, to maybe like 157 or 158. 157 to 158. 158. 155. If it gets to 155, right? So where is it now? 156. Even at 155, theoretical value would be like sorry, have I got this right? Underlying price 156. Yeah, well, first of all, remember I've only put in there 50 cents. So I'm using that as a calculation, 50 cents, because I'm not sure one, if we are actually going to get filled there, and secondly the indicative price is correct because the market is closed. But what I did do, but that just to illustrate, you know, that's what I was illustrating. What I did do is I put in few orders in there during the day. So this one here, right, this one here, I'm looking for a call for 164 strike call, and it's a June, not September, but it's a June contract, and I am putting a limit of 30 cents, and currently the price is at 156, 150 at 57 cents. Now it may be that, you know, if the price begin to, if the things start going up, I might have to go back and maybe adjust that 30 cent to maybe more closer to 50 cents. So that, I think I have a good chance of filling at 50 cents, and at the 50 cents you can see sorry, go back and change that to 50 cent. So create an order and say I ask for 50 cents, and then see how that particular contract will behave. So you see, if for example we get to 160, from current price to 160, right, at 160, 50 cent to 160, current price 50. Okay, if it gets to come on, if it gets to 166, yeah, a little bit difficult to show you on here, but hopefully, yeah, there we are, 164. If it gets to 164, my contract will be worth nearly $3 each. So you can imagine it doesn't actually give you a split between that. But if it gets to 163, 164, I think, you know, you need to get it to 163, 164, and it would be worth about $3. And if by June it gets to 169, then it will be worth close to $5. So initially your $500 will be multiplied by 10 times. It will be worth $5,000. You know, so this is the sort of thing, when you really get to grips with this kind of concept, and they're fairly simple. The options can be very difficult actually to trade, but we are not exactly looking to trade very aggressively or using complicated strategy. But on this particular case, you can take a longer term view, and you'll find that some of your trade will score twice and 3 times. Some of your trade will go for 4 or 5 times or 6 times or 10 times, and you could be, you know, using this on different currency pairs. I mean, here for example we've got a list of currency pairs available. So it's a pound, Canadian dollar, Australian dollar, New Zealand dollar, Swiss franc, and yen. Okay, but then you can probably pick things like gold, you can probably pick things like silver, or pick things like oil, pick you know, S&P 500 index. So you'll have a basket of them all, and different time, different strategy, different strike prices, and some of them will be maturing sometime, the other one will be maturing in a month or two. So over a period you could begin to get a basket of them, you know, and I think that's where the big money is, without really, you know, really fretting and really looking at minute charts. So I hope you'll forgive me for having gone so long, but I wanted to show you this because we are at the early stage of where the pound is, and there is a possibility that, you know, you can probably do demo trading and just see how things develop without risking a dollar on any risk. And whilst you are trading your normal account, you also get to know how you trade this one, and if in the process you think is really something that you like to develop, then maybe between now and some reasonable time you can gain enough experience to maybe start doing small trades on that particular method, and hopefully over a longer term you might be able to actually do well and not even bother about a normal currency pair trading. But choice will be yours. I hope I've shown you. So with that, I will stop the recording. I think that's gone on for too far.